Hey guys, welcome to episode 31 of the F.I.R.E Fund Friday series. We had yet another volatile week in the market that proves patience is key. When the markets are acting up, the best move is usually to stay on the sidelines and wait for the right opportunity to jump in. So, to make this a quick weekly update for you guys, let's jump right in. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. This week was a great example of waiting for the right opportunity to enter. There was some market optimism around the middle of the week on Wednesday and Thursday, but then the Consumer Price Index report came out Thursday afternoon, showing that inflation is at all-time highs, causing everything to melt down on Friday, and we saw stocks hit their weekly lows at that time. I actually did most of my stock buying for the week in the last 5 minutes before market close on Friday afternoon, but it also does make me wonder if I jumped in too soon, and perhaps is a sign that next week we will see some big drops. But I was conservative with my amount of purchases this week, so we should be fine to buy up more as it continues to drop. I was also able to take advantage of the market euphoria on Wednesday when Nvidia shot past $265 per share and closed out one of my options contracts, freeing up $25,000 of collateral. You guys have no idea how happy I was to get out of that contract. I am staying out of options trading for the time being due to the extreme market volatility. So that's how my weeks in the market went. Let me show you the purchases I made for the week. I started off my week with one share of SCHD for about $78. This is a high dividend ETF that has an annual average return of over 14% over the last 10 years. So this is a high quality dividend growth fund that pays over $2 per share annually. I have been wanting to diversify into something like this for some time now, but since it contains mainly large cap companies, it's likely to take a big hit as the market goes down this year. So I'm dollar cost averaging about one share every time the share drops $1. So when it hits $77, I'll pick up another one share. This fund can be a staple for many dividend growth portfolios, and the one share I picked up brings the total in the portfolio up to 11 and increases our annual dividend income by $2.20. After that, I picked up 4 shares of QYLG. My cost basis for this position is quite high, so I have the same buying philosophy for this as I do for SCHD. Every time the stock price drops by $1 or more, I will dollar cost average a few shares to bring down my cost basis, and technically it is buying on sale. I do believe the growth sector will continue to get hammered over the next few months, but since no one knows when the bottom of the market is, it's better to jump on buying opportunities here and there instead of sitting out completely trying to time the bottom of the market. The 4 shares of QYLG I picked up brings the total in the portfolio up to 34 shares and increases our annual dividend income by $11.54. After that, we have our usual purchases of RYLD and QYLD. RYLD actually recovered quite quickly after dropping to the low $21 range, while QYLD continues to drop. This is because the two funds track different indices. RYLD tracks the Russell 1000, while QYLD tracks the NASDAQ 100, which we know are pretty much the largest technology companies in America, and we all know how those stocks have been doing. So RYLD has been floating around the $22 range all week, so I did not buy as much of it as I did for QYLD. I'm hoping for a slightly larger drop from RYLD next week so I can load up on this position. I am trying to get these two positions to 400 shares by the end of February. But I was able to pick up 14 shares of RYLD this week, bringing the total of the portfolio up to 355 shares and increasing our annual dividend income by $37.12. After that, we made a huge purchase of QYLD right before market close on Friday afternoon because it dropped under $20.40. We spent $650 on 32 shares of QYLD, bringing the total in the portfolio up to 370 shares, which generates an incredible $77.24 of annual dividend income. I honestly may have pulled the trigger too early on QYLD since high inflation worries will cause a large-scale sell-off of growth stocks, and it should drive QYLD lower. But as long as I'm buying under my average cost basis, it's all good. Dollar cost averaging is the name of the game. And since this is supposed to be a buy and hold forever cash flowing position, the paper value of the stock should not matter too much. For example, if a real estate investor sees his home value drop by 30% in a week, but is still cash flowing and paying them every single month, they don't care about the home value in the slightest. We are building a cash flowing asset through our quadfactor portfolio strategy, so we have to look at the price drops the same way. And remember that market volatility is here to stay for the next few months, so be patient and take advantage of the fear. Alright, so it looks like this week we spent $1,163.05 on stock, which increased our annual dividend income by a nice $128.11. This brings our total annual dividend income to $4,452.27, which is a growth of nearly 3% over last week and bringing us 1% closer to our goal of $12,000 per year of annual dividend income. Another small step towards our goal. I look at these numbers every week and think about it as an annual pay raise. My job gives me a raise once per year, while my income portfolio gives me a raise every single week. That's why I love tracking these numbers. It lets me see that I'm always getting a step closer to my goals. So for next week, I expect us to make some large purchases as the market continues to sell off due to inflation worries, so hopefully I will be able to pick up more RYLD at a bigger discount. And that's it for another Fire Fun Friday. I hope you guys didn't get hurt from Friday's large drop. Let me know how you guys are doing in the comments below with all this market volatility. Also, if you haven't already, please consider hitting that like and subscribe button to follow along as we continue to watch this market burn. As always, thanks for watching, and I'll see you guys on the next one.